By the end of this video, you will learn how to make $1,000 in a single day by simply trading breakouts. I'm going to be sharing some crucial insights that most people in the YouTube educational space don't actually cover. Well, these are going to be game-changing tips, and make sure you guys stay until the end so you wouldn't miss any single one. Before we begin, I would just like to tell you guys that trading the breakout pattern, it's only going to be very good when the market condition is actually trending. If the market is on a constant range, you're going to be having a hard time capitalizing trading breakouts, because this is where a lot of beginners fall off if they're actually unable to identify the market condition. There's actually multiple types of market conditions, such as breakouts. There's also going to be trading ranges, but for today, I'm going to be teaching you guys how to trade breakouts. And remember, breakouts only work the best if the market is trending. If the market is consolidating, I suggest you guys to slow down or not trade at all if the market is not in your favor. So I want you guys to be focusing onto this box. You can see the market is actually just consolidating in this specific level. You can see it's creating highs, lows, and lows again, and then suddenly a break impulse to the upside. So with that alone, you can see the market was just consolidating within this range, and suddenly we did have ourselves a breakout. And then looking into the left, we can see the market is actually trending. So yes, we can actually trade breakouts by playing continuation patterns for us to capitalize the next big moves in gold. So from this, the next step that I did, that I always preach a lot, is to be able to identify your higher time frame direction. So from this one alone, looking into the daily, obviously you can see the daily created this low of a range and created this high of a range. Remember, for me to change my entire directional bias for gold is if you break this low, but for now you can see that the market just created a breakout, not a break of structure. Okay, from that alone, I already know that the direction or the overall bias of gold is going to be bullish. So the next step is you guys should be looking for your entries. So if we're going to be looking into this one right here, you can see that we did have our market consolidation, and then we did have our sudden breakout. So now, once we did have our market breakout right here, the next step that you guys should be doing is to be identifying your point of interest. So what did I do here specifically? Well, once we got our higher time frame direction, it is time for us to identify points of interest that actually caused a breakout, which was this very simple demand level right here. So the next step I did is I just went to the H1 to see a better, clearer picture, and you can see that market is actually just consolidating within this entire range. You can see the market is consolidating and then created a big impulse to the upside. So the next step that I did over here is just going to the lower time frame and to be identifying multiple lower time frame levels in which we can use to take as our entry. Because you can see over here is that we did have our breakout by having this highs being taken out. We can see right here there's created a break of structure, and then from that alone, once we got our break of structure, a lot of people would prefer to start taking an entry here immediately, but what I like to do myself is to be waiting for a pullback. Remember, you can always take a direct fill for like an entry, probably catch around 150 pips move, but to be extra safe, you guys just want to be waiting for the pullback. So now, looking into this level right here, remember this is an entire H4 zone, we want to be going on multiple lower time frames to see our point of interest. So the next step I did is I went to 30 minutes to start looking for levels, and then I went to the 15 minutes, and then what really caught my eye was this one right here. I want you guys to be focusing on this one specifically. You can see that in the 15 minutes, we created a lower level right here, a lower breakout. Once we had a breakout to the downside, we then had another push to the upside right here. Once we had another push right there, you can see the market created a pullback right here. So you can see the market created this low, created a push to the upside, created a pullback, and it created an impulse that broke multiple structures. So with that in the way, we were able to see that market was already breaking out of this range, and then we can see that we did have some demand levels right here. So the first thing that I did over here is just mark this demand level right here. After we marked the demand level, we can see that that demand level was already used. So the next time I did is I marked another demand level, which is this level right here, and then after that we can start marking this candle that created a lot of inefficiencies with price, that created fair value gaps in the market, and then created a big impulse to the upside that broke multiple structure. This is the candle that created a impulsive 180 pips move. So that means that is going to be the point of interest where I'm going to be looking for an entry. And remember, what makes this level really good? What makes this level different from the others? Well, I would call this level as a demand chain level. Look looking into this one, you can see that we did have our first demand level, and then we did have our next demand level right here. This is gonna be the final demand level that created inefficiency in price and created a big impulsive structure to the upside. So now looking into that alone, I already knew that it was time for me to start looking for an entry position. All I did is I did set my limits all the way into this level right here, putting my stop loss. You can put your stop loss all the way here around 30 pips, around this entire level, or you can do 40 pips, or we can just put it around this level right here. And then once market started pulling back, you can see that there's actually a big impulsive move to the downside, okay? A big market structure push down. But then remember, we already know our higher time frame directional bias, which was bullish. We already have our demand levels right here, like our demand chain. We were able to have our breakout patterns right here, and now we're playing for the pullback. And remember, the market trend is bullish, so everything is lining up to our favor. So we're gonna be labeling this stop as the external range liquidity, in which we can actually have a target. Remember, you can also pull down your Fibonacci levels for potential Fibonacci extensions, which are like this. And you can see that once prices push to the downside, you can look at this level potentially as somewhat as inducements. And the market came all the way down, had that beautiful sniper entry tap, and then market pumped all the way to the upside, smashing multiple TPs in a span of 5 hours. You were able to bag over 210 pips or 7 RR within 5 hours. And remember, if you guys want to see more educational videos like this, make sure you guys press the notification bell and the subscribe button and the like button, and comment down below on the other videos you guys want to be seeing next. I'll see you guys soon.